Hello fellow intelligent investors, my name is René Zellman and today I want to start the video with a question. Do you know what the stocks of Facebook, Google, Netflix and Restoration Hardware Holdings have in common? And what you as an investor can learn from this? Maybe you want to pause the video here and take a look at the graphs for a second. Well, over the last decade, they all generated wonderful market-beating returns ranging from 25% to 40% annually. But to enjoy these returns, you had to accept quite a bumpy ride, and thus only those investors were able to capture these gains that had a strong belief in their investment thesis and were willing to wait for their thesis to materialize. And this is the topic of today's video. Today you will learn why having conviction in your investment ideas is so crucial. So stay tuned and let's get started.
Have you ever wondered how you can make your hard-earned money work for you? Have you ever dreamed of building generational wealth and leaving a legacy? My name is René Zellman and I'll teach you how you can manage and invest your money with confidence, a long-term vision and without losing your mind. Join me on my journey of intelligent investing and learn how smart people can compound their money effectively and accumulate wealth.
Alright, so I came across a shocking fact last week. Did you know that despite being up 25x and 35x over the last 11 years, the stocks of Amazon and Netflix have only beat the market in 6 of those 11 years? That means they actually underperformed almost every second year. I did not know that, and that made me want to make this video. And this phenomenon, so the phenomenon of beating the market over the long run, but not in every given time period, can also be observed when looking at other market-beating stocks. I would like to show you 4 examples in this video. So let me start by showing you the stock chart of Facebook. On July 16th, 2018, the stock's closing price was $209. Now fast forward to May 11th, 2020, and you could still purchase Facebook's stock for $209 per share. This means that investors experienced a flat return period of 22 months, almost 2 years. Yet, investors who were patiently waiting for their investment thesis to pan out enjoyed an astounding and market-beating compounded annual return of 19.3% over the last 3 years, 23.4% over the last 5 years, and 38.3% over the last 9 years. Similarly, over the last 9 years, Google investors enjoyed a compounded annual return of 26%. Yet, between August 2018 and April 2020, the stock didn't move at all, a 21-month period, and there was actually another 18-month flat return period between 2014 and 2016. And here's another and maybe the most extreme example that I came across. Between 2013 and 2019, a 6-year period, the stock of Restoration Hardware Holdings, ticker RH, pretty much didn't move at all, despite the business growing its revenue every single year. But then, within 1 to 2 years, the stock price suddenly increased significantly, leading to a compounded annual return of more than 40% over a 9-year period. I think it's probably fair to say that many, if not most investors would struggle to hold a stock for 6 years with no significant reward. But as you can see, selling prematurely would have been a very expensive mistake. And here's one last example. Between July 2011 and September 2013, Netflix stock barely moved at all. That's a 24-month period. Yet ever since July 2011, Netflix stock has compounded at a beautiful 29% annually, over a 10-year period. Okay guys, before I move on, please make sure to leave a like or comment, or even better, to subscribe to the channel. I seriously put a lot of work into my videos and I try to keep the quality of the content high. And obviously, if you engage with the video in some way, this helps to influence the YouTube algorithm, reach more people and grow the channel. Thank you. Alright, so all of these data points that I just presented about the performance of Google's, Netflix and Facebook's stock, they are incredibly interesting and they inevitably lead to the concept of conviction. But what exactly is conviction? Let's define this term. Well, according to Collins Dictionary, if you have conviction, you have great confidence in your beliefs or opinions. But obviously this is a very broad definition, and to come up with a more specific definition for conviction in the world of investing, I want to reference Sleepwellcapital, who recently wrote a Substack blog post on this subject and who actually inspired me to do this video. He defined conviction in the world of investing as a differentiated opinion on a company's long-term prospects, with a high level of confidence achieved after gaining the required knowledge while becoming comfortable with the risks and aware of the consensus view. And I think he absolutely nailed it here. One core aspect of conviction is having a certain level of knowledge about a company and an idea of where the business is heading. However, just because you have an idea of how the business will develop, this does not necessarily mean that you are going to be right. I think that is very important to keep in mind. Nonetheless, I think it is fair to say that the more you know about a business, the higher the chances of you actually being right. I think you cannot develop conviction in an investment you have made unless you understand the business. You have to understand how it makes money and what its unit economics roughly look like, who its competitors are, whether the firm has some kind of structural advantage that helps it fend off competitors, how customers perceive the firm's products or services, the company's target group, new product initiatives where the company operates geographically, how the firm distributes its products or services, the management team's track record, and so on and so forth. And obviously that list goes on, and you probably get the idea here that truly understanding a business and reaching a high conviction state is not necessarily an easy task. It requires some time commitment. And obviously, and please pay attention now, you cannot understand every business. In fact, you will probably not be able to understand most businesses you look at, and hence you will not be able to develop the conviction needed to make an investment in 95% of the stocks out there. And the number is probably even higher. You can probably only have conviction in a good handful of stocks. Don't fool yourself here. I think you will often think that you understand a business, but then at some point in the future something unexpected happens, and it turns out you missed something and didn't actually understand the business. And this is how you lose money. Warren Buffett, he already said, "I like businesses that I can understand." Let's start with that. That narrows it down by 90%. There are all types of things I don't understand, but fortunately there's enough I do understand. And I think stressing the importance of understanding whatever you want to invest in might be the biggest lesson Buffett has taught the investment community. Without understanding, I think there is no conviction. Okay, to wrap up our attempt of defining conviction, let me share a nice illustration that Ian Cassell recently shared on Twitter. He too used the term conviction, and he came up with this sketch to describe what he calls the mini cycles that are part of every multi-bagger's journey. So apparently the best performing stocks, they usually don't go up in a straight line. As an intelligent investor, you want to exploit that. So to enjoy multi-baggers, you will eventually need to have the conviction to hold the stock and wait until the stock price performance reflects the positive developments of the business. And ideally, you want your conviction to be so high that you are actually able to add to your position during these flat return periods. All right, and now I'm curious, how would you define conviction? Please share your understanding of conviction in the world of investing in the comments down below. So, defining conviction, that was the first step that I wanted to take. What I want to discuss next is how you can actually build conviction. I often say that while you can borrow ideas from other investors, you cannot borrow their conviction. So conviction in an individual stock cannot be taught. But what can be taught, I think, is how you can reach that high conviction state yourself. And I will do that in a separate follow-up video, and I will present a 3-step conviction building framework that you can then use. And with that, I'm going to wrap it up here. As always, may your finances and investments prosper. Good luck.